Hello, everyone. Welcome to multi-time frame analysis. So Stuart couldn't make it, so I'm taking over the presentation. So yeah, today will be the presentation. You're going to do the multi-time analysis with me. Here is Andrea, for those that they don't really know me. And it's the very first time that they are participate to one of our webinars. Right, so let me just open the question box as usual, just to make sure that everything is okay. So let me know if there is anything. Not Louise, let's get back. Sorry, wrong slide. So as I was saying, we're gonna see how the multi-time frame analysis will help you taking decisions in regards to your entries or exits in the market, and etc. So, but before we do that, I would like to make sure that you can hear me loud and clear, okay? And I need to go through the disclaimer warning as well, as usual, actually. Just give math and guys, a quick yes and a no in regards to the audio will be very useful, please. Okay, very useful. And I need my risk warning, which apparently I deleted by mistake. Sorry for that. Just give me a second. Thank you for replying, Anoth. Thank you for replying, Sophia. So audio is fine. Just give me a second to upload also the PDF version and everything. And I will get back to you. Come on, come on, come on. As usual, I will remind you that you will get the recording after we are done. Okay, so don't worry about it. The webmasters, our IT, will provide the disclaimer ASAP. And disclaimer warning is on. Recording will be sent after the end of this webinar, and we are actually good to go. The PDF version, it's loading, so don't worry about it. You will see it in the handout section in a second, I think. So we are good to start. Sorry, it was a very messy day, so that's why I'm a bit late today. Sorry for that. So PDF version on. Perfect. We're good to go. So disclaimer. These materials provide as a general marketing communication for informational purposes only and does not constitute an independent investment research or an investment recommendation or solicitation for the purpose of buying or selling of any financial instrument. We make no representation, assume no liability as to the accuracy and completeness of any information provided, and we shall not be held liable for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading forex CFDs may not be suitable for all investors and carries a high degree of risk to your capital. Trading such products is risky. You may lose all of your investment capital. So we are done. You're good to go. So after today's session, I have the confidence that we're gonna have a clear understanding on how we can combine in our intraday analysis several other time frames, but also like for 1 hour, 4 hour, daily, and weekly price action to have a clear understanding of how you can make high probability trades using multi-time frame analysis and know what kind of intraday price action helps you to time your entries with a high accuracy. So with this, with the just to give you a bit of an intro, what we can achieve with multi-time frame approach is the fact that first of all, it can be applied in every single time frame you prefer. So what I'm trying, actually no, that sounded a bit wrong. So what I'm trying to say is that even if you are an intraday trader or a long-term trader, multi-time frame approach um, supports, or it's adjustable to both kind of traders. So if, for example, um, uh, you are less than a minute, than an hour trader, you can still take this approach. You can also make money if you apply an appropriate technical analysis and risk management as well. And how this will help you is by the fact that by checking the multi-time frame analysis, so by checking a higher time frame and a lower time frame, and identify what the lower time frame and the high time frame signals, it will bound you to be less stressful. Okay, and I will explain further. Don't worry about it. We're gonna see together these bullet points and what I meant by them. So, but let's do a bit of an intro first. Okay, a bit of an intro. I should actually, it was my mistake for applying for for the previous slide shows. We should have went straight to what is multi-time frame analysis firstly, and then getting to what you will gain from this webinar and what's the benefit, what's the advantage of proceeding with multi-time frame analysis. So what it is, first of all. Okay. Multi-time frame analysis is simply the process of using more than one time frame, okay? Actually, at least two time frames in order to, in order to take any decision in the market. Okay, so simply is the use of more than two time frames to the minimum, okay, in order to identify momentum, direction, and to in general to obtain to 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 see the overall picture and the short-term picture of the particular asset. Okay, so the majority of the technical traders in the market, in the forex industry, they use this kind of okay, let's put on. They use this kind of approach, okay, in order to avoid any misleading signals. What I'm trying to say, if you're coming across with several multi-time frames, okay, not overdoing it, of course, okay, there is some kind of a rule, hidden rule. We could say that you shouldn't go more than two scales higher or lower. For example, if you are an intraday trader, obviously you will not take your decision based on a daily chart. I mean, if you're a 30 minutes trader, you will not go up to a daily chart in order to take a decision for an entry in a 30 minutes chart. Okay, so there are some restrictions, but the concept of multi-time frame analysis is to give us um, um, is to help us reading the charts and developing strategies um, based on the based on the momentum analysis, the price action analysis of at least 3 time frames. Okay, so just to make things a bit easy for you, multi-time frame analysis simply involves monitoring the same asset. Let's assume that you like gold, because many people like gold lately. Monitoring, for example, gold across different frequencies. Okay. In reality, there is no limitation on how many frequencies you will monitor, but the more you do, the more complicated it gets. And also it's pointless, as I said earlier, to monitor to be a scalper, okay, 30 minutes chart there, for example, and observing or monitoring the weekly or monthly chart. Okay, so there are some limitations. So typically the ideal or what the majority of the traders are doing is using 3 different periods. The one that they are usually trade on. Let's say, for example, that I'm a scalper and I like trading 30 minutes chart. So in order to avoid any misleading signals, I go down a scale, so monitoring the 15 minutes chart, and also I check the overall picture, which is 1 hour chart. So I go one scale upwards, one scale downwards, one scale upwards. Okay, so typically is the use of 3 different periods. Okay, so using the top-down approach, as we call it, in order to identify the overall picture, but the short-term picture as well. Okay, so for example, if we are intraday traders, not scalpers, so 1 hour, 4 hour trade, 4 hour time frame. So we're going to check the dominant trend in the daily chart, okay, but also the shift into the down approach, as I said, and check also what's going on in the 1 hour chart in order to identify some nearby support, resistance levels, and etc. Okay. Let me see whether I'm missing anything over here. Perfect. So yeah, we're gonna see all this in practice. Don't worry about it. But it's a very, very short briefing on what we mean by saying multi-time frame analysis. So let's move on. Okay, you guys, you can ask anything you want. By the way, you can interrupt if there is anything that is like a question mark in your head. Okay, so I'm here to help anyway. I'm not here just to talk to myself, right? So let's move on. By the way, something that I haven't really mentioned, and it's a very, very last bullet point of our slide. By monitoring, actually by using the top-down approach, so we even though we are trading on the same time frame that we tend to use to trade every single day, okay, and by monitoring another 2 time frames, what we can achieve, right, is not only to identify the overall momentum or the dominant trend and etc. It also helps us, the multi-time frame analysis helps us to identify also support and resistance levels, the long-term ones, which are considered to be strong ones, but also some immediate support resistance levels, which eventually you can use as as entry points. Okay. So Ale is asking, Aluantoni is asking, how you can see my screen. I'm sharing my screen. And it's weird that you cannot see it because all the rest can. Maybe log out and log in. So you haven't seen my screen for 10 minutes now, for 15 minutes now? Because I'm sharing my screen. Okay, let me know, Ale. Let me know. So let's move on. Why I bring on my slides the pivot points, the pivot high and pivot low. Just very, very briefly, in order to have in mind that using a multi-time frame analysis and this top down and top bottom up approach, it's one thing, but also monitoring means that in this top down and using this top down approach, we need to monitor any pivotal highs, any reversal signals, any pivotal lows, for example, any rejection of resistance and support levels. Okay, this is so you need to do your usual analysis, everything that you have learned so far, but to use all this in 3 different time frames. Okay, so you're gonna still check for any reversal signals, any rebound signals, any pull back away from resistance level, any rebound away from support level, whether your asset is in an uptrend or a downtrend, but you're gonna do all this in all those three scales. Okay, so I will need to show you my MT4. I see the problem, though you were also showing charts. No, I wasn't sharing, but I will share. I will show chart right now. Okay, and I will start with the mover of the week. Okay, I will start with the mover of the week, obviously, which it has been the cable, right? So you can see cable right now, right, guys? So let's assume, okay, that I am an intraday trader. I tend to trade in 1 hour chart. I can see this on. I have my usual setup, my Bollingers, my 50, 200 moving average, MACD and RSI as usual. And I have seen all this spike since yesterday on cable. So it's time to decide whether there is anything like that. What's going on in cable? Does it worth an entry now? Is it running out of steam? What's going on in general? In order to take a decision whether I will enter anytime soon or not. I'll keep monitoring. So what I can see over here, this is the 1 hour chart. Okay, so I'm a 1 hour trader, so obviously I'm gonna check the 1 hour chart first. And what can I can see? I can see that it's in a rally. I had 3 very strong bullish candles in the morning, a reversal later on, and some consolidation right now with small body candles. My MACDs keep rising. RSI is at 80 territory. It's at 80, but it doesn't, it's a bit flat, neither pointing downwards, neither pointing upwards, right? So what I can see right now from what I can see right now is that I have a really, really strong positive bias, but I don't have an entry signal yet. In order to have an entry signal, I need to see my asset breaching and breaking the latest high at 124.87, right? So that's the one thing. So I have done my analysis in the 1 hour chart. Okay, perfect. So now I need to go and do the top down approach. to see, to get more, to gather further information about cable, right? Okay, so what we have from the 1 hour chart we said is that a strong positive bias, but for the time being consolidating. Okay, so we're not really sure whether this rally ran out of steam or not. So there is nothing that requires an immediate entry. So let's go a step up to see the overall trend, which is my 4 hour chart. So in my 4 hour chart, there are a lot of interesting things over here because I had identified last week by connecting the highs and the bottoms of the cable in this 4 hour chart that it is moving in a descending triangle. Can you see that? This is something that these are lines that I connected last week. I connected my highs, I connected my lows in this 4 hour approach, right? 4 hours. So I shifted a time scale higher, right? So, and I I knew I had identified since last week that my asset is trading within a descending triangle, right? In the flip side, I also have a trend line in my MACD because I noticed that it's posting some higher lows. Even though MACD was negative, it was posting higher lows. So the negative bias, the negative momentum in MACD was detecting, was decreasing. So it's like the sellers are are like are getting are um are getting less and less. So I have declining negative bias, right? Which actually today, actually that was since yesterday, right? My asset managed to cross and exit my descending triangle. MACD line turned positive, and my asset not solely broke and turned above the descending triangle, also it crossed the 50 period moving average in this 4 hour chart, right? Are you okay so far? So what information we are getting from the overall picture, the 4 hour chart? Okay, by saying overall is because I am 1 hour trader. So I went scale up to the 4 hour chart to see what's going on in a higher time frame. Okay, and then I will take the down approach and check what's going on in the shorter time frame. So what information we are gaining from the 4 hour chart is that it has broken our descending triangle. It has broken up and is keep moving southwards. It has broken northwards. It has broken the 50 period moving average. This is the blue line. This is my 50 period moving average, the blue line, and it keeps moving higher. It has posted a very strong, big, bullish candle the previous session, and this candle is quite significant because with this candle it extends away from my 50 period moving average descending triangle, but also it has managed to broke a round number, the 124. So it broke 124 and breached the 124.87. Okay, so, and also another information is that MACD turned negative. Okay, the signal line is still a negative, but the MACD lines have turned positive. So the momentum has changed. Okay, so over here, the information that we're getting is that there are more bulls than sellers. There is a signal over here that we have a very strong bullish bias, okay, and we might see further appreciation of cable. So the next resistance that we're getting is the top, the May's highs at 126.30. Okay, so we have seen all these technicals. We have identified a resistance area. And let's find our support area as well, which is this double fractal over here, is this bottom over here. Okay, so this was initially a resistance and now has turned into support. And if I'm not mistaken, it might be the mid of our candle. Is okay, nearly at the mid, but yes. So this is, so we have over here the high of the day. We have the next resistance area. We have one support area over here. We'll put it with a different color. Let's put it with red. And if I want the second support as well, it should be on the 20 or the 50. Yeah, actually should be on the 50 period day moving average, period moving average, sorry. So let's now get back to our so here was our 1 hour, and let's see what's going on in the short time frame. So I will take a step backwards. I will go to a lower time frame, lower than 1 hour, which is the 30 minutes chart, to see what's going on over here, because I want to identify whether the bullish momentum will continue or this rally is running out of steam or not, and when is the right time to enter the market, either to the upside or to the downside. I mean, either to trade a potential reversal or either to trade a potential further appreciation of the cable. Okay, the moving average in blue was the 50, the moving average in red is the 200. Okay, so now this is the 30 minutes chart. In the 30 minutes chart, I can see that my asset is still consolidating. So what will I do? I have already put a line on the day's highs, right? So here it is, because we have identified from the up approach, from the 4-hour chart, that there were some bullish signals along with the increasing bullish bias. But now we need to figure out well, whether is this has it will stop anytime soon or not. So we have put a line on our high of the day, so that it will be an entry if the asset breaks it and signals the extension of this rally. Because as you can see, the 30 minutes chart, the momentum is still increasing, so momentum is positive. RSI is above 70. It has turned slightly lower, but is not pointing downwards, right? So there are still bulls that are fighting for this trend, for this upwards trend. They're fighting to continue this trend. But there are also sellers that they are fighting for the asset to get down. So there is not a clear picture yet. So this is my immediate resistance area. And that one, okay, actually it would be better to, you can either use your fractals or use the candlesticks. So I have put my resistance area slightly higher from the peak of the day. I put it above my fractal at 125 because it's a round number as well. So if the asset breaks it, that will mean further upwards movement. And on the flip side, I put the immediate support below the fractal, so that will be at 124.27. So if considering all the things that we have seen in the 4-hour chart, all the things that we have seen in the 1-hour chart, and what we currently see in the 4-hour, in the 30 minutes chart, which is an increasing, a keep increasing MACD, but a bit of a flat RSI and a sideways movement in the 30-minute chart, we will wait to see whether our asset will break the 127 and move upwards, or whether it will correct and turn below 124.27, and we can trade on that in this scenario a pullback, a potential pullback. So I will get back to my 1 hour chart. I have done everything that I needed. So what I need now is just to wait and see, or setting my pending order. So if the asset breaks the 125, then that will mean that it could, at the next resistance area, it will be at 126.30 level that we have identified using the top-down approach, and by identifying this resistance area in our 4 hour chart. While if it gets back and break and move below the 124.27, that will open the doors to a potential correction or a pullback, with the next immediate support levels at the round 124 level and also at the round 123 level. Is that clear so far, guys? Do you understand how the top top down approach works? Perfect. So we can move on to other examples and ways, for example, to use a multi-time frame analysis. Okay, so I will get back to my slideshow. Okay, I will skip few slides because I put them on just for you, for your benefit. Okay, but I prefer to go to an actual examples, and you can check the pivot highs, pivot lows, and etc. in your free time. It's better to see a lot of examples and understand together how you can apply multi-time approach rather than spending time on the basics. Okay, so here we have, okay, it's a very old screenshot. It's just an e-signal chart, but it doesn't matter. It's just to see more examples with me and to comprehend best the multi-time frame approach. So over here we have a USA 500, right? Okay, so that's a daily chart, and it was in a rally. It topped over here, as you can see, and for 1, 2, 3, 4, 5, 6 days in a row, it was in a decline. So we have applied over here on this decline a Fibonacci, our Fibonacci. Okay, so Fibonacci levels, at from the top, from the high, from the top of the trend to the current low. Okay, and so we started vice versa. We started by monitoring the high time frame, which in this case is the daily chart. So we have applied the Fibonacci. We can see over here that it was a very sharp decline. Okay, and we can see that the last 2 days the asset was outside Bollingers. So that's a signal of an oversold asset. Okay, that's a signal of an oversold asset in a sharp decline, breaking the 200 period moving average, 200-day moving average, as you can see over here. Actually retesting it right now because it broke down and then it rebounded. and stochastic being in the oversold territory as well. So what we have from the daily chart is a negative a downtrend, but with the asset being oversold. So remember, oversold, if the asset is oversold, there is the more likely a rebound will be seen. Okay, so now we're taking a step down through the 4-hour chart to see whether this decline will continue or there are any reversal signals and etc. So in the 4-hour chart, we keep our Fibonacci, by the way. In the 4-hour chart, we can see that the asset rebounded from the latest low, but it didn't manage to breach or break the very first Fibonacci level. Okay, that's one thing. The other thing is that the stochastic, indeed, they rebounded from the oversold territory, but they haven't breached the 50 level yet, because if they had breach and break the 50 and pointing further to the upwards, that will imply to further positive bias, but they are still below the 50 level. Also, we can see that the Bollingers are extending lower. Okay, so what we are gaining from this 4-hour chart is that there is more bearish bias than bullish for the time being, because stochastic is still below 50. Our asset hasn't managed to bridge and break the 23.6 Fibonacci level, which is our immediate resistance level. Okay, the asset is well below 50, 220 period moving average. So there is nothing positive yet, nothing to trigger that this decline, this sharp decline, will reversal and will get back to the 2079 highs. For the time being, the picture, the outlook over here, in this 4-hour chart is negative. So I took a step further down to the 1-hour chart. Okay, so this 1-hour chart, okay, I could see more details. Remember, in the 4-hour chart and the daily chart, I could see that there is some kind of a small rebound over here, but the asset is still oversold. In the 4-hour chart, I could see that it tried to breach the 23%, but it didn't manage. So I want more information. So I would go down to the 1-hour chart. Over here, I can see that indeed it tried to retest the 23% Fibonacci level, which is the 209.50, but it quickly turned down sharply. Can you see how big these candles are? Then it consolidated and turned further lower. So what I'm getting in this 1-hour chart is that indeed it retested it, but since then it's having lower highs and lower lows. Can you see that? And Bollinger is still it's like it's in a downwards channel. Stochastic is ready to bearishly cross, and you see that the fast line is ready to cross below the blue line. So there is a bearish signal over here. The asset posting lower highs and lower lows, and over here when it retested the 23.6 Fibonacci level, we could see that it retested it, but there was a very fast and sharp decline afterwards. And even without zooming to the 15-minute chart, you can see how big this candle is, that it has broken the low of the previous candle, and we have another one very, very strong, very, very solid, without any tail higher, indicating that the sellers are in control. So all the three time frames that we have used are giving more bearish signals than bullish. So that gives us the confidence that the USA 500, by using this multi-time frame analysis, this small rebound, where is it? Let me just, sorry, let me get back to the daily chart. This small rebound that we saw today, for example, is not a sustainable one. Okay, because the overall picture with the daily chart, along with the 4-hour chart and the 1-hour chart, agree that there are more pressure, more sellers than buyers. So this reversal looked to be just a correction before this trend continues to the downside. How do we know when to go short? Simply doing this analysis, okay, we have, if you notice, we have put some support and resistance levels. So as soon as your either your support or your resistance level breaks, that would be your entry. Like I said in the cable example, I have put on support area, resistance areas which are in blue, and support areas which are in red. As soon as any of those triggers, I will know what to do. I will know whether I will go long or whether I will go short, and these are my targets. So I'm timing. I'll be able to time my entry because I have found support and resistance levels in these multi time frames. I have found support and resistance levels in 30-minute chart. I have found support and resistance levels in 1-hour chart and in 4-hour chart. So as soon as my asset breaks any of these levels, I will have my entry point, my target, and my stop loss. So for example, if the cable breaks the 125 and close above it, then I could, this is a bullish signal, so I could enter long with support at 124.27, which is my immediate support level, and target at 126. Okay, so that's why we're doing this analysis, for identifying any contradictory signals, for identifying support and resistance levels in multi-time frame, which we will eventually use for entry points, targets, and stop losses. Is that clear, Alabi and Amanze? You can, Agorede, you can go. So Agorede is asking, can I go beyond the 30 minutes chart? What I show is just examples. If, for example, what kind of time frame you're using, Tiara Agorede? Which time frame you're using for in your daily routine? Which time frame, in which time frame you have your setup and you take a long or short positions? Can you reply, Akorede? In 15 minutes chart. Okay, Akorede is a 15 minutes trader. Okay, perfect. So I have a 15 minutes example. So what you will do is go one scale higher, so 30 minutes chart, to check the higher time frame, the overall trend, and one step backwards, which is the 5 minutes, I'm afraid, to check the short time frame. Okay, one scale up, one scale down. You can also go, because you're a 15 minutes trader, you can also check the 30-minute chart and also the 1 hour chart. But be careful, guys. No more than 2 time frames higher or 2 time frames lower. No more than that. Initially, I mentioned only one up and one down in order not to confuse you. But the theory says that you can go 2 scales up. So like a Gorote, which is a 15 minutes trader, he can check the 30 minutes chart and the 1 hour chart, but no more than that. Okay, no higher than that for identifying the overall outlook of the asset. Okay. So over here I have it's a 1 hour chart, and I went down to 15 minutes chart in order to see what happened over here. And I noticed something like no, it's not an evening start, but it shows how big the bearish candles were and the fact that they broken. It returned all the losses in a single candle, all the gains of the previous session, and extended for the lower and extended for the lower until it reversed its gain. So it's not an evening start, but it's a clear indication with this full body candle with no tail, no bottom tail. It was clear in this 15-minute chart that there was an aggressive selling. So that was, so if you were since you were a 15 minutes trader, if you were a 30 minutes trader, okay, by checking the 1 hour chart over here in this S&P and the 15 minutes chart, you could be able in the 15 minute chart to identify an entry, a short entry, just by observing and by identifying this full bearish body candle that broken the previous candle at the resistance area. Yeah, thank you. Thank you, dear Bago. I was trying to figure out I couldn't remember the name in English. Yes, you're right. This is an equilibrium bearish pattern. Thank you, Bago. I couldn't remember the name of the pattern, of that pattern. Thank you very much. Yes, this is a bearish equilibrium formation. So if you you had seen in your 1 hour or 30 minutes chart this test over here, by going down to the 15-minute chart, you could see that this is a bearish equilibrium pattern. So you could take your short entry because it rejected this resistance area and it turned lower, giving us this bearish signal, this bearish equilibrium pattern. So you see, so you could have entered short and gain on this pullback. I noticed that most of the stronger support are found in those higher time frames. 4 hour upwards. So can I use that for key level identification and still use my time frame for entry? No. Wait. I don't want you will get you cannot use your observations of a 15 minutes chart or any entry that you are about to take in a 15 minutes chart with targets that you have identified in the 4 hour chart. Because this will mean that your targets and your support levels will be far, far away. And if something happens and the trend turns against you, you will suffer major losses. Okay, so I will, that's a good question. So let's have a look, okay? Let's have a look. Because anyway, the slides are not not so important. You're gonna have a look at them later on, so it's better to go through examples in a live analysis. Okay, so let's see something else. Let's see euro yen. Let's see euro yen, guys. Why not? Since Akode loves 15 minutes chart and he said 15 minutes trader, let's have a look on dollar yen, even though, okay, it's a bit sideways, but okay, why not? Let's do that. Let's do that. So Agorede is a 15 minutes trader. So let me actually clear a bit this mess. Keep just simplify a bit all this mess. So, okay, this is dollar yen, 15 minutes chart, right? So we said that we can go up to 2 scales up and down. Now, where are we? First of all, let's first analyze the time frame that Acorete tends to use, his primary time frame. So he's a 15 minutes trader. So what we are seeing over here, we can see over here is that the assets spike higher, quickly turn lower. Can you see how doji this candle is? With a long tail higher, but a very small body candle. Okay, what that means? Can anyone tell me? The fact that it has a so small body candle and a big long tail, it means that sellers are in control. Why? Because regardless of, even though the bulls push the price higher as much as they could, sellers won because they managed to close the candle very, very close to the open price. So that's a bearish candle. That's exactly, Bago. That's sellers in control. Bravo, Acorede. So, and we have seen this selling pressure down with the very next candle, aggressive to the downwards. Okay, so rejecting this, quickly reversed. So we have this as one resistance level, right? The asset turned aggressively down, posted a new low, okay? Tried to recover, it didn't manage, and is currently still at, it's still like moving, is at the low territory of the last few sessions, right? So what we are gaining from here, let's have a look. So all we can see is that it had a small rebound, not a sustainable one, and it turned back down again. Okay, so that is our immediate resistance level, right? Is that clear? But there is not a, so we'll put it above the, okay, here above the fractal. But fast moving average are flattened, Bollinger is flattened, stochastic had a bearish cross and it pointing downwards. So okay, we don't have a clear like sign of what's going on in this 15 minutes chart. That's why we're gonna do our top-down approach. And I will start with the top. Let's go higher to the 30 minutes chart to see what's going on overall. What's going on overall is a bit clear. The asset moves sideways. You see that? The asset moves sideways, right? So the last, since Friday, it's in a range, right? Between the 128 and, to be more precisely, the 128.67 level. Okay, let me zoom in a bit so you can see that. 128.67, and the high, the top of the range is at 129.63. So you can see I'm using I'm finding multiple support and resistance levels, which I put them on because they might be useful in the future when I decide to enter. Okay. So in the overall, in the 30 minutes chart, which is my higher time frame, I still see this sideways move in a channel. So the top of the channel is at 129.63. The bottom of the channel is at 128.67. I also have found, based on my 15 minutes chart, the another support level, which is the day of the low of the day at 128.80, and the low of the last the low of the last few sessions, which is at 129.17, and resistances at 129.40, which was my previous high, the top of the day and the top of the channel, etc. So the 30 minutes chart didn't really help because it's still giving sideways movement. Stochastic, though, is bullish in the 30 minutes chart, pointing to the upside. But fast moving average Bollingers are flat. Okay, now let's get to the 5-minute chart. So let's go a step downwards, right? So what's going on in the 30 minutes chart? In the 30 minutes chart, which is something that we have observed also in the in the 5 minutes chart, something that we have also observed from the 30 minutes chart, is that stochastic is it has a bullish cross and pointing higher. The same stance in the 5 minutes chart. So we have seen a rebound away from 129.17, up, small doji candle, but that's a bullish signal because regardless of the big down leg, it closed very, very close to the open price, and we have a very sharp another boost higher. So in the lower time frame, is in a strong rebound. So that will what that suggests that there is a shift of momentum from negative to positive to bullish. Okay, so we have a bullish cross in the 15 minutes chart, right? So what's my immediate resistance level in this 15 minutes chart? The latest fractal over here. The latest up fractal is at 129.30. So as soon as the asset breaks that level, a long position could be taken with the target at 129.40, which is our next immediate resistance level. Okay, so with this way you are timing your entry. If the asset breach and breaks that level, then that will mean further bullish bias up to 129.55. If not, then we might see a reversal because anyway it's trending. So do you get the meaning how you can use the multi-time frame on your benefit? Okay, the yen wasn't a great example. We could try something else. Let's stick to the 15 minutes chart that Akorode likes. Okay, so what we have, this is euro, or shall we try a stock or a no? Let's keep currencies on. So 15 minutes chart. This is euro dollar 15 minutes chart. It was overbought, correct a bit, extended higher, overbought again, turned down, but it give us an immediate resistance level, which is the high of the day at 105.55. So what's the picture in this 15 minutes chart? It's in a rally. Okay, it's in a rally. MACD positive, I keep rising. RSI still on the overbought territory but flattened, so it doesn't give a clue whether it will turn down or whether it will rebound again. So that's not clear, but overall the picture in this 15 minutes chart is positive with the latest fractal over here, latest a higher fractal, our immediate support level. So now let's see the 30 minutes chart to go a scale higher. Are we getting any further information from the 30 minutes chart? The only thing that I can see different over here is that RSI sustains the 80 territory, so there is further steam, further bullish bias. MACDs keep rising. Let me put them, sorry, I had to put my 5 and 9 as well. Sorry, just give me a second. So however, okay, what's about the 30 minutes chart? Okay, I can see that the rally still on, MACDs keep rising, RSI is okay, still positive, no pullback, but neither an upwards slope. Stochastic also remains above 80, no indication of a pullback. But my fast moving average are pointing on the left hand side. So there is a question mark. It will keep rising or not. But overall, the 30 minutes chart is in a rally. It presents a bullish momentum. Okay, so the overall trend, uptrend, is still on based on the 30 minutes chart. In the 15 minutes chart, we have seen a bit of a pullback, but still positive bias it is. Let's see now the 5 minutes chart. So we went the scale downwards. Let's see what's going on over here. So over here, we have something contradictory. We have consolidation. So we have seen the fast moving average flatten, pointing on the left hand side. So that flattened, that suggests consolidation. MACD, can you see that MACD, the signal line, has clashed with the histogram over here? That means again consolidation. But what's tricky is stochastic. Stochastic turned down and is still pointing downwards. Okay, so okay, so what we have over here in this 5 minutes chart is an indication that for the time being, for the next few minutes, consolidation is still on. However, the asset overall is in a bullish mode. So this consolidation is temporary. It looks temporary because in our 15 and 30 minutes chart, they are everything points to a bullish outlook. And if you check your 5 minutes chart, even though the stochastic is down, RSI is sustained close to the 70 territory. So this is just a correction. So what we can understand from that is that if the asset breaks the 105, there is further steam to the upwards for the next session. And more precisely, in order to identify, you can actually apply Fibonacci level in order to identify our next target areas. So you should see that. So if that breaks 126 extension, 123 and 161 extension could be our immediate target, our next target areas, because overall there is still a lot of bullish momentum for euro dollar in the 30 minutes chart, 15 minutes chart and 5 minutes chart. So the 5 minutes chart came to confirm that this is just a correction. This is just a temporary consolidation because still there is a lot of positive momentum. Is everything clear, guys? Because that's it. I mean, that was our webinar. I decided not to go through the slides, but to give more examples, and you can have you can and you can see check the slides afterwards by yourself. It was just informative. I mean, we have covered everything that is in the slides anyway. We have been misusing my Fibonacci's. Why? I love them. You see, another indication that we have seen from the down approach from the 5 minutes chart, that this pullback that we had seen in the 5 minutes chart, this bearish candle that we have seen in the 5 minutes chart, if I go to the this pullback that we have seen in the 15 minutes chart, we went down to the 5 minute chart and we could see that it came down to the 85% retracement level, but quickly turned up, quickly rebound away from it. Okay, so you can see that that wasn't a sustainable pullback. Okay, and you can see that, you can confirm that from the RSI in the 5 minute chart, that it's still very close to 50 and sustaining and pointing to the upside. MACD well above 80. So the price action in the stochastic uh, present that this pullback looks to be temporary if we consider our findings in the 15 minutes chart and our findings in the 30 minutes chart, in which we can see an increasing bullish bias. And also something that I missed, a bullish cross of my 50 and 200 moving average over here, indicating that there is furthest into the upside, at least for the next few sessions. Yes, it's good that you're using your support and resistance level as your entry levels. Yeah. Have you using it on, yeah, if you can use it in the, okay, you can use it, you can check the 1 hour chart as well, just to see the overall trend and identify any extra targets in case that the the intraday one's broken. But I don't get your question, to be honest. Tiara Gorete. Yes, Bago, this is recorded and we're done if you want to go. It was more of a technical analysis, live technical analysis, than a theoretical webinar. It's just to give you a different view of how you can benefit by using multi-time frames. In general, it's good to use multi-time frames because if, okay, I couldn't find an example like that, but it could it could time your entry. So for example, if we have if we had taken, for example, let's do an example. Okay, if yesterday, okay, we had identified, let's an example why multi-time frame is important. If we had seen this rally yesterday and the breakout of this latest up fractal, the breakout of the descending triangle in the cable, in this 30-minute chart, if we have seen this, okay, if we had seen this and we had taken, okay, let's assume that we have taken this entry yesterday on the breakout of this latest up fractal, on the breakout of the descending triangle, and we have used as a target. So let me zoom out. Let's go to the 1 hour chart. So we have taken that entry and we have used as target the highs, the last week's highs at 123. So as a target, the 123.90 high, which was seen last week. So let's assume that we have seen this. Okay, let's take one example. Let's assume that yesterday, okay, you have seen this rally on cable and you have taken an entry on the breakout of 122.95 high, because you have seen that it's outside descending triangle, it broke that high, and you have taken this entry, okay, this long entry, and you have set as your targets the latest up fractal, the latest high over here on the 11th of May at 123.99, and stop loss either the body of the trend line of the descending triangle, or the 20 period moving average, or the 50 period moving average. I will have probably used the 50 period moving average because it also coincides with my latest down fractal, etc. Let's assume that you had a long entry with this as target and this as stop loss. Using multi-time frame analysis helps you time your entry. Why? Because you need to set, so let's see that, because by time your entry, okay, what I mean by time your entry, you have taken this entry and you had this target, right? Then you have identified this stop loss as well. With this way you are timing your entry, but let's assume that something went awfully wrong, okay? Let's assume that something went awfully wrong, and you have taken the entry, it went high, but it stopped. Let's assume that it stopped here, right? And there was a pullback. Okay, there was a pullback. So by going a step down to a 30-minute chart, you could have observed, okay, I need to find an example actually to show you something like that. So let's assume that it stopped appreciating and there was a pullback. So you had to investigate whether it's time to exit because something went wrong and will not move as high as you wish, and etc. By checking the lower time frames, you can identify reversal signals. Do you get what I mean? Or I need to find a precise example. I will try to find a precise example. Okay, I think I did. I think I found a precise example. Let's use dollar yen over here. Let's use dollar yen, okay? Oh, sorry. Sorry, come on. Okay, yes, I have found a precise example, okay? Okay, this is the 30 minutes chart, okay? So let's assume that I had identified, focus over here, guys, okay? Focus over here. I have identified this rebound, okay? And I took a long entry, okay? I took a long entry over here. Actually, let's be precise, over here. Because I had a bullish cross. So this was my entry actually on the beginning of this candle, because I had this bullish cross. The asset broke and moved above the 20 period moving average, and my latest up fractal over here was also broken. So I had put a long entry over here, right? Is that clear? Okay. So let's assume that I have taken a long entry, okay? So how I could time my entry? The possible target levels that I could set are these two: 123, 129.92, which are the latest 1, 2, 3, 4 consecutive up fractals. So that could be my one possible target area. And another possible target area is these up fractals at 130.22 and etc. So I have used those as my potential target areas, but I can see, so the asset boosted, then give me a doji candle, boosted again, a doji one, but revert over here. So over here I have an evening star formation. Something is going wrong. It didn't manage to reach my targets and is moving sideways. So I need to investigate. Is it time to exit? That was a wrong. Shall I lock profits? Shall I exit here, not to wait to hit my target? So the multi-time frame will help you time your entry. Why? Because now that you are monitoring your long entry, you can see that it failed to breach the target and is moving sideways, and it gave you an evening star formation over here. You need to check whether this rally already ran out of steam without hitting the targets, or that's just a correction. So we need to investigate whether this is a reversal signal or just correction before another attempt to the outside. So we are in a 30-minute chart. We go down to the 15-minute chart, right? Sorry, I need to go where my entry was. Okay, here I am. So what I can see, zoom in. I will zoom in. Okay, here I was. I took the entry here. I saw that something is going wrong over here, and I keep monitoring what's going on in the 13-minute chart. And can see that it shifted to 129.80 high, turned lower, it's consolidating. Since then, it's consolidating, and soonish I had these two bottoms, okay, consecutive down fractals. So this looks like, sorry, a descending triangle. So it was the very first indication that I had that momentum is declining. So you can see MACD, momentum is declining. RSI is also sloping lower. So momentum is declining, and the confirmation that I should exit my long entry before it's too late came with this bearish candle in the 15-minute chart that broken that immediate support level that I had identified, and it was a strong bearish candle. So that was the time that I should exit, because that's in order at least to lock some profit or break even, because before my entry comes against me. So are you okay, guys? Can you see that this saved me from persisting in this long entry and keeping that long entry while the asset was turning against me? Can you see that? Is that clear? Can you see? So at least I could have locked some gains and exit the long entry, because it started turning against me. And instead, I could actually open a selling position, because that was a strong candle, lower highs, MACD turning down until it turned negative. Stochastic was also declining, RSI was also declining. So yeah. Okay, I think I'm gonna call it a date. I show a lot of examples. Hopefully, it's clear how useful the multi-time frame could be, either for timing your entries or identify possible entries, identify multiple support and resistance levels that will help you to identify an entry and then use them as target or support areas, and etc. So I will call it a date. This is recorded anyway. You will get the recording on your MT4s, on your email. Sorry. So anything you need, guys, let me know. Send me an email at webinars@hotforex.com. Sorry, webinars@hfm.com, and I will reply as soon as possible. Thank you very much. Have a great day ahead, and see you again tomorrow. So tomorrow we're going to have the two strategies. We're going to see two strategies, okay? The two two of Kathleen Leon's strategies to be more precise. Waiting for the deal is the one strategy, and fader is the other strategy. So let me share, by the way, the calendar with all of you, our webinars calendar. Let me share it. Sorry. In agfm.com, our website, as you can see, webinars field, and we have the waiting for the deal along with the fader strategy. So Kathleen Leon strategy is very straightforward and very interesting strategies. Again, have to do with the timing, how to time your entry, and the price action as well. Money management this week with Otto, and next week we're gonna see another two of Kathleen Leon's strategies, TPOs, okay, TPOs and market profile, candlestick patterns with Otto, and three key indicators, RSI, MFI, and ATR with Stuart at the end of May. So register now before you forget it in order to get notifications about the webinars. So I will call it a date. Anything you need, send us an email at webinars@agfm.com. Okay. Remember, Hot Forex has evolved into HFM. It's just a change of the name, nothing else, in order for us guys to be able to provide you more products other than CFDs, to provide you also the physical products that physical stocks that they will be soonish available for you. So that was necessary to change the name to HFM in order to provide more and more products for you other than Forex products and CFDs for products. So that was it. We are the same people, the same company, same values, nothing changed. We just changed our name in order to be able to provide you more stuff. Nothing else on that. Thank you very much for attending. Hope you're having a great day ahead, and I'll see you again tomorrow. Bye-bye.